Welcome to DACM Insights, where we explore the intersection of traditional wealth management and digital assets. Whether an institutional investor exploring digital assets or a wealth advisor helping clients understand this space, you'll get practical insights from leaders who are actively managing real money in both traditional and digital assets, and the entrepreneurs building the disruptive tech that drives the space so exponentially. John, thanks for joining us today.
Pleasure to be here, Richard. Great to be on board. Long time in coming.
It's great to have you here. I think one of the interesting things is, John, you and I have a very similar background before crypto in terms of coming through TMT ranks in investment banking. So it'd be interesting to understand how you made a similar leap to me to end up in crypto and how that journey ended up at Coinbase.
Yes, certainly. Thanks, Richard. I think it kind of probably would be categorized around kind of career waves of learning and wanting to learn new things. I remember being a TMT banker at Goldman, hired the first kind of .com boom, late 2000, saw a bunch of people kind of wiped off the floor and realized I needed to kind of stand out if I was going to stick around. And so I went to wireless engineering night school at Columbia and tried to understand the difference between kind of the fixed line internet and the mobile internet. And that was clearly a really different kind of world. And then somehow wound up in China, trying to appreciate what mainland Chinese technology companies were doing, and saw the kind of rise of Pudong and the semiconductor plants and fabs there. That was kind of the turning point, taking some investors around some of Pudong and Shanghai. And then with a pizza business up there, saw that the kind of guts ripped out of that business by the big delivery platforms. And they kind of presaged what happened with the Deliveroos and Uber Eats of the world, probably by a good decade. And then you really needed to be able to harness Tencent and WeChat Pay and Alipay and others, and the advent of QR codes. And that led me down the road to Alibaba and kind of payments. And then my first foray into Web3 was probably trying to understand some of Alibaba Cloud's early blockchain applications as we were trying to pitch those to sports stadiums and all sorts of providers in Australia. But the Beijing, Canberra diplomatic channels were pretty frosty then. And I think we all know Jack Ma got himself into some challenges. And then this kind of pivot to crypto probably wasn't quite as insightful or ahead of the curve as you were, but it's been a lot of learning ever since, and huge amounts of humility if you want to be successful in this space.
Yeah, I think disruptive technology has been an interesting place to build a career around, and it seems like we've had, albeit a little different, a lot of exposure to sort of frontier, early stage disruptive tech. Do you see those parallels between that sort of early career in the 2000s and what you've gone through in crypto?
I'd like to think it gives me some patience to hang on. And I think we've probably chatted about this over a beer when you're putting your own money to work. And I've done that in a former life. And I've certainly got a bit sunk into a few different tokens and projects. I think you need to have the confidence that, you're kind of building the plane while you fly, and eventually everyone will understand why that's a better plane to be on. So, I think we're seeing that with some of the big use cases. Stablecoins is probably the one we'll talk about later today. But I think the train's left the station, and I'd like to think that we're going to see some just incredible developments in the next decade. You can sometimes be too early to these waves, and sometimes you can be too late. So I think we're in a nice kind of position right now.
You timed your entry to crypto with Coinbase in 2022, so you definitely didn't join at the high. But you've joined a company that's built an incredible reputation and was there at the start, right? So it's been around for a long time and managed to see through the volatility. Now, from our discussions, there's a bunch of growth focused around the APAC region, moving into India, big push into growth through Singapore, even down here in Australia. US first crypto business pushing into APAC. What are some of the challenges you faced?
I would say in a lot of our international markets, we're stacked up against very impressive local exchanges. And whether that's Singapore or the UK or Germany or Australia, we probably came into those markets a good 5 to 7 years behind the CoinSpots and SwiftX's of the world. So again, we have huge respect for the local exchanges, the local brands. Australia is a bit of a parochial place. Like a lot of the Commonwealth countries, there's a few chips on a few people's shoulders, and they don't always like the big American tech platforms. And so if you are going to come down under, you need to kind of burn the boats and hire good local people and really be a good actor if you're going to get an audience, well, one, just with consumers, they want to see something authentic and local, but particularly as the way regulation is developing, you really need to be able to play your cards right in Canberra. So I think we have been challenged from starting from behind. We had to offboard over 1.5 million consumers who were onboarded to Coinbase through some offshore entities under the previous kind of model that we operated under. But international as an org, a bona fide org inside Coinbase is, 3.5, 4 years old. But now it's really developed and operates efficiently and clearly with all these other cross-functional teams at Coinbase under the three big pillars of the business: consumer, institutional, and developer. And so I think we've got a really strong offering in that we are a one-stop shop, and clearly are a very loyal and supportive client and partner for many, many, many years. And I think they're the type of partner that looks at a Coinbase and sees a match. You see a trusted exchange. You've got LPs and investors from all over the world. You may happen to have teams in Australia, but you're kind of a global digital asset business. And so we have a global offering, and we hold ourselves to a pretty high bar with, constant vigilance. And so I think increasingly, as the space becomes more mature, I think our offering and our brand probably resonates with more and more. We've had the initial waves of adoption of crypto in Australia, and Australia is a really healthy market when you look at global trends around consumers using crypto. 1 in 5 Aussies has some exposure to the product. So the train's left the station here. But I think now, as regulation becomes more serious and compliance and other things potentially become a little bit more onerous, and people need to really step up, those are things that Coinbase has spent a lot of time investing in. We also want to be nimble and quick and be able to do things better. We're listing tokens faster. We're trying to offer more leverage, etc. But I think there's some really big kind of requirements that'll be required if we want to get, 3 in 5 or 4 in 5 Australians owning crypto. And so very, very optimistic about the future, but, coming from behind.
And sticking to Australia for a little bit, the debanking phenomenon across crypto has been, from personal experience, somewhat pronounced down here in Australia. I think 75% of crypto businesses in Australia report that they've been debanked at least once. Is that an outlier for APAC, or have you hit the same sort of resistance across the rest of the region? And secondly, are things on the improve in Australia?
Yeah, I think what you've said is factual, unfortunately. I think having, come to Australia 12 years ago and dealt with big banks all over the world, it's not great globally, whether you're using the HSBCs or Cities of the world, or using Macquarie or Westpac. The banks have had an amazing kind of oligopoly or / monopoly forever. Multiple royal commissions have commented on this and charged banks hundreds of millions of dollars of penalties for not conducting themselves in a way that supports their customers. And we see that with debanking in crypto in Australia. Unfortunately, it's still happening. The Coinbase mission is to drive economic freedom and ensure that people can get access to their capital and move it around in a very cost-effective manner and in an atomic time frame. We don't need things to be closed at weekends. We don't need multiple layers of fees, whether you're a consumer or an SME or a merchant. And in some cases, we even see banks, double dipping, having accounts with us, for example, or other big exchanges, and they might have internal hedge funds or proprietary trading desks that are trading crypto. They're also marketing multiple ETFs that, we have a lot of. We're very grateful that we custody a lot of those ETFs because they're big brands that want to work with a Coinbase. So they might be pitching multiple products to their institutional clients or their wealthier clients, but the man and woman on the street is not allowed to take money from their bank account and send it to a crypto exchange to buy some Bitcoin or some Ethereum or learn and dabble in a space that their children or their grandchildren are telling them about. That I find really disturbing, and increasingly, thankfully, there are politicians and representatives in Canberra who are well aware of that, and we need to bring attention to that.
Well, it's good. I think my journey as a CBA customer recently, one of the only letters I've ever got to them was them warning me not to ever send money to a crypto exchange, which I found quite bizarre. It's like one of the only times I think I've ever, apart from a statement, it's one of the only things I've ever heard from them and it would
No,
support
no,
either.
no,
Surely there's bigger issues on the calendar than me sending some money to a crypto exchange.
no comment.
I think one of the interesting things, and you would have seen this a bunch sort of through the .com period now, that always the risk with a disruptor like a Coinbase is you get disrupted yourself. So I think one of the super interesting things Coinbase has done is with the launch of Base, right, to stay, I guess, as native and as close to the disruptive sort of edge of crypto as you can, while keeping that DNA of a NASDAQ listed, audited mega cap company, right? So it'd be interesting to understand how that fits in with your business and how you see that playing a role with Coinbase going forward.
Yeah, certainly. So just to be, I guess for, all listeners and all people kind of appreciating what we're doing, there are three big buckets to our business: the consumer business, the institutional business, and the developer business. The consumer business is the day-to-day spot exchange. You open the app and you trade, and you can do retail advanced trading if you like. Then we have the institutional business, which is a lending business, a financing business, a kind of prime, what we call our prime platform, more exotic products for institutions and digital funds and asset managers, etc. And then the developer bucket is really where Base sits. And that's about developing apps for effectively, the Web3 environment. It's where the wallet business sits. And it's kind of the future of the industry. And we don't know what that's going to look like unless we think we're involved in building it ourselves. And so there was a lot of conjecture about whether we should really lean into this space because we have so much intellectual property, particularly around, our layer 2 Ethereum platform, which got branded as and that has now been kind of hived off very much into kind of a standalone business unit. And so the Base team has really ramped up its international exposure, I would say, in the last 12 or 18 months. It started off as a very North American kind of driven business or series of projects. But in the last 18 months, Jesse Polak has appointed a very strong leader for that team, Zen, out of the UK, comes from UBS. I had a Web3 business himself that got acquired. And he's been appointing country ambassadors across Europe, Africa, Middle East, India, Southeast Asia, APAC, Japan, Korea. And that's really allowed us to give the best projects that are out there the kind of patronage and the steering and the attention that they need. I would say Base is quite different to other, I would say, layer 2s or other protocols in that I think a lot of the land grab in the Web3 space was really around funding projects that probably didn't have a reason to be funded. There was a white paper, there was a whole lot of hype around a token. And I think the industry's grown up and we're kind of beyond that. Now, if projects want to qualify for Base funding or various kind of support from the Base ecosystem, they really need to stand on their own 2 feet and be able to kind of prove themselves, kind of up against everyone else who's in the Base ecosystem, and then they kind of qualify for support. But this is really the future of the business. It stands on its own 2 feet from a profitability standpoint, and it's becoming a really nice, meaningful revenue generator. There's lots of conjecture and discussion around a Base token that's quite kind of public now, and so it's the thing that kind of gets me out of bed. I get way more excited, to be honest, going to Base meetups and being a judge at a competition for something to do with Base, or meeting builders in that space and talking to parts of government or civic society about things that we should be doing on the blockchain and in the Web3 world than I probably do about what fees or spreads are we charging on the spot exchange. But that's our bread and butter, right? So super exciting.
And have you found it's a good lead into some of the markets where you don't have the exchange capabilities yet? Like somewhere like India, where I think 15% of all crypto engineers are based in India now.
Certainly, yeah, and we are into India in a regulated fashion. But to your point, Soumya Saxena, who runs India, has got an incredible landscape and ecosystem of projects going on there, and we're playing really big catch up there behind Polygon. And so that's exciting. I think what Base is a great entree to in lots of markets is where we probably are not necessarily ready to be there with the regulators. And so when you think about some of the Southeast Asian markets, the Thailands, the Indonesias, the Vietnams of the world, the Pakistans of the world, these are places where we can bring advice, we can bring intellectual property. A lot of these markets, the government is really moving quite nimbly around Web3. Because of that point you mentioned, they've got all this human capital. They've got these devs, these engineers. If you're working at one of the big BPO companies or one of the big tech platforms, you probably got a side hustle in Web3, or you're probably doing something with crypto. So I think that's very, very important for keeping intellectual property and human capital onshore. And let's not forget, there is amazing Web3 human capital in Australia. We're churning out lots of engineers, the Canvas of the world, the Atlassians, the Afterpays, the Zeros. They've kind of primed Australia for this next decacorns. And, I think Immutable was an interesting one. We haven't quite seen where Web3 games has gone versus Web2 games. I think Immutable is going through a bit of a metamorphosis and is probably going to reinvent itself and become something, quite special in the future. But there will be some really big names pop out, and whether it's in the kind of DeFi lending space, as we've seen some hot names here, there are going to be, amazing projects. Zora offshore, though, led by Australians. Echo, I think you talked about a kind of NFT purchase recently with Kobe's business. That's a much bigger business than just a set of podcasts. Again, run by Australians offshore. There's about 40 odd Aussies at Coinbase. And so we've got amazing human capital. We've got to keep that onshore, and even better, bring it back onshore when those people have been successful. I think you and me spent time all over the shop doing things. And when you come back here, you really want to kind of get into something meaningful. So I'm very excited around where Base is going.
Another area where Coinbase has been ahead of the pack, and I guess has rolled its sleeve up to participate, not to spectate, is around stablecoins, being a partner with Circle and the minting capabilities and those sorts of things that you offer to clients is market leading. We've spoken about before the usability or the adoption of stablecoins, particularly through APAC. How do you see that playing out now? What do you think of the differences in APAC? Why have APAC consumers and businesses been so receptive to stablecoins? And do you think that leadership continues as we look forward sort of 5 or 10 years as the stablecoin market sort of 10x's, if you believe the US Treasury Secretary?
Yeah, I wish some of our own officials were talking like that. I remember being at a conference about a year ago, and pretty senior people at the RBA being, talking exactly in the opposite language. So look, I think the stablecoin use case is the future of crypto. Clearly, everyone understands what Bitcoin is. There are, 5 to 10 other important utility tokens, and then there's stablecoins. We've made some big commitments to certain projects and groups with XSGD and AUDD in Singapore and Australia recently. Just on those 2 points, because I know lots of people talk about it, I think we're agnostic to stable coins in the kind of private sense of them versus CBDCs. And we had to start kind of with someone. And so I think we'd love to work with all of the Australian stable coins. And I don't know if Australia really qualifies for more than a handful of them, to be honest. But that journey has been terribly exciting for us. We have received inquiries from all manner of kind of more commercial businesses than just, market makers and people looking to replicate FX trading on chain. Clearly, there's lots of speculators and people who take advantage of inefficiencies in the market in the way that they do with, FX trading globally, which is the biggest asset class out there after real estate. And so I think you'll see that replicated in on-chain FX, which is an important use case in itself. But more importantly, you think about trade flows in Asia and Southeast Asia in particular. Probably this is a little bit removed from Australia, but I think we're part of it, particularly around Singapore and Hong Kong and Korea's and Japan's of the world. Business people there and entrepreneurs and founders in particular, and traders in the more kind of traditional sense of the world, moving commodities around and goods and services, are a lot more wary of the cents and the dollars and the basis points than maybe some, bigger, wealthier Aussie corporates or MNCs or, mining companies. And so you have that kind of CFO, treasurer, controller type attitude where they're like, wow, okay, this is going to save me X, let's do it. And so you've got lots of these conglomerates, because they've got good internal tech skills, finding someone who understands Web3 and setting up their own stablecoin internally for, treasury purposes. And I remember talking to my old colleagues at Ant Group and Alibaba Group. They've got marketplaces all over the world. They need to move money around the world to settle their accounts in various markets, and they're headquartered now internationally out of Singapore. And so why would they be calling up, Standard Chartered and paying hundreds of basis points and waiting days, if not weeks, to move money around when they could put some pretty low kind of IT investment and sunk cost into their own stablecoin platform and move billions of dollars around atomically. And so that in itself is just, incredible. And it's going to be those really big, chunky players out there in the market that are going to move, be moving a lot of this money. And then at the other end of the spectrum, you've got, let's say migrant workers, Bangladeshis, Pakistanis, Filipinos, Nigerians, whoever, looking to move money in a lot of frequency, probably not as higher amount, but just getting absolutely reamed by the Western Unions of the world and the traditional players. And these people, they just work out how to find the yellow cards or the on-ramps and off-ramps of the world. It doesn't even need to be as well integrated, or the user experience can actually have 3 or 4 more clicks and hops on it. But for this stuff to go mass market, we need to really advance the CX and make it a lot easier to do. Paying with stable coins right now, like with a QR code in a retail environment, is probably easier than remitting money in stable coins right now. But we're getting there. And, tech companies are going to sort out this UX flow just as fast as the fintech companies gave the banks a rev up when you think about the Wises and Revoluts of the world.
Yeah, I think you mentioned 2 of the important things I see around the growth of stablecoins. The first is for fintech companies and traditional finance companies coming to use stablecoins. One of the benefits is the back end's already built. Like Ethereum already exists, right? So you're just plugging into something that's already existed. You don't have to go and build your own infrastructure. And that's, I guess, one of the beauties of crypto across all sorts of applications. The speed to market is accelerated because so much of the infrastructure is already open sourced and there for you to use. The second thing, and I think I'll be interested in your perspectives, we seem to be at a pretty interesting inflection point in crypto where, in my view, there's a small amount of people, well, there's a decent sized market of people that want to use something because it's new and it's techie and it's kind of cool, right? Which is kind of that sandbox environment. There's a way bigger market of people that want to use something if it can increase their bottom line by cutting their costs. And it feels like all the crypto bros and the people that have been using stable coins for years have kind of proved up the technology. And now it's finally clicked amongst a whole bunch of big corporates that, this technology works. It's been proven in production. And by the way, it actually can materially increase my margins if I move to it. And that's the thing that gets people moving, right? That's the thing that gets risk committees over the line. That's the things that gets big CEOs of big corporates that generally don't want to take risks to actually make the move.
Yeah, and I think some really interesting discussions there going on around public and private blockchains for this. A lot of these banks are still kind of scaremongering people around security and stability and resilience of these networks. I mean, let's be honest, the banks and the telcos and the traditional MNCs in Australia are amongst the most poorly prepared in terms of cybersecurity, the most underfunded investments in terms of IT budgets, and the resilience of traditional non-peer-to-peer networks has been proven to fail in many instances, whether it's, 000 dialing and tragedies in the telco networks, the airline flight systems in terms of those being down because of a single point of failure. And so all of that peer-to-peer stuff is just so well geared up for the future, and we should be moving to it. And yeah, I couldn't agree with you more. We're certainly at the tipping point. I still feel like, coming as an outsider and as a very humble guest in Australia, as a Kiwi, I still feel like Australia's, and to a degree New Zealand, they're just kind of the lucky countries, and like they're not in any great desire to push things more quickly. But, if you're a BHP or Rio Tinto or one of those guys out west and you lose, one of your big Chinese iron ore contracts, like very quickly, you start looking at these areas where you need to cut cost and save money. And to your point, we're going from hundreds of basis points to tens of basis points. And then over time, once like you say, you're plugging into an existing platform, we're not building server farms or AI farms to get this stuff going. And so, yeah, super exciting. And there's people onshore at home, probably in your organization already to help you. I know when we've spoken to partners about trying to launch products, if you put your hand up for the Web3 project on an internal posting board at a big Aussie corporate, there's going to be a bunch of junior engineers who are going to be like, hey, get involved. This is a lot more interesting than my day job, whatever else I'm coding. And yeah, I think that's super exciting for Australia.
I guess at a corporate level, bigger moves Coinbase has made over the last 12 months, launching your own international perpetuals exchange, the acquisition of Deribit, which I think still stands as the biggest M&A trade in crypto, although maybe something's passed it recently. So obviously a bigger push into derivatives. How do you see that playing out through Asia, which has obviously been a very derivatives-led market? And how do you bring that to the region within your existing capabilities?
Yeah, certainly. And so I think it's also important for people to recognize, a lot of Deribit customers are probably already Coinbase customers. They were very,
Like us, yeah.
like DACM. I think they're a very kind of institutional, facing brand, and they have a very, very, very solid offering. And in many ways, I think, we found the offering appealing as much as the team and the list of clients and the trajectory the business is on. So we have a, major integration kind of commitment with Deribit, and working with Luke and the CEO there and the team. It's a very, very exciting kind of partnership. And the teams are now all fully onboarded and embedded on Slack, and we're kind of away to the races with the Deribit teams. I think in APAC, they had existing businesses in Singapore and Hong Kong, and we're covering Australia. So it's kind of just business as usual around Deribit. And I think the changes are probably going to come more on the Coinbase side than the Deribit side. And so it's kind of, Deribit powered by Coinbase. So it's kind of a little bit of a co-brand right now. And we don't really want to lose the flavor of Deribit. But yeah, we're fully in sync with their teams. Lots of potential here, building out a few more teams in Dubai, because some of their teams are there, and in Amsterdam, and then building out a few more bums on some seats with our Insto team in Singapore, and as I mentioned, a few people in Hong Kong. So it's pretty much business as usual, Richard, to be honest. I think that is a heavily overweight Asia business. I think Asian traders and the trading audience here are a lot more kind of comfortable and familiar with that product and kind of lend themselves to it. I think the volatility and the risk really play into that kind of Asian trading mentality. So yeah, we're trying to work out how can we serve that market more and more. Australia, we would like to onboard people to our institutional products, yourselves included, through our CB Australia entity, and that'll come with the AFSL journey, which we hope will be proceeding forward with in terms of having a license offered early in the new year, like a number of players in the industry.
Armstrong, your CEO, has set a target of getting 1 billion people on chain. It's always helpful when the CEO sets ambitious targets for his executive teams, John. How do you see that playing out in APAC over the next 3 to 5 years?
Yeah, unless there's some pretty big demographic changes, it's not going to be happening in Australia, is it? I think we're kind of flatlining and getting more pets than we're getting children.
You have some big population centres in your remit, John.
We do, yeah. And to be honest, a nice growth in the Aussie market, and it continues to grow. And we'd like to challenge those tier one exchanges I spoke about at the top of the call. Other geos, clearly, we're focused on India. We're running a 2-horse race there. I think you'll have seen we re-upped our investment into CoinDCX. That's a kind of bit of a frenemy relationship. CoinDCX really look at Coinbase Ventures as a kind of standalone, kind of funding arm. And so in some ways, we kind of need to keep an arm's length from them and let them run their race and we run ours. And so I think from an executive team and a board, they've thought, how can we have as much exposure as we can to India? And so let's have an inorganic route, i.e. CoinDCX, and an organic route, which is CB India. So we've had a soft launch in India for the last 2 months. And we've just finished what we call phase 1, which is have mobile and web fully operational out to a general audience. Started out with a kind of MVP, and now we're ramping up to a fiat offering. In the first 3 or 4 months, we were only offering crypto to crypto. We wanted to really make sure we were compliant with the FIU, the Financial Intelligence Unit of the Ministry of Finance there. And we've been providing all that reporting, learning a lot along the way and making sure all the plumbing's right. And then into the new year, we'll be offering a full fiat offering. So super excited about India. We're going to be at India Blockchain Week, first week of December, holding some trader events in Mumbai and Delhi. And that really is a big push for a lot of the team.
Coinbase covers probably must be one of the biggest stakeholder spreads in the entirety of crypto. You've got degens using Base, you've got institutional clients, you've got tens of millions of retail clients across the globes in different jurisdictions. You're listed on the NASDAQ, so you get owned by index funds. You must meet a bunch of people that are, not fully up to speed with crypto. What's the thing that you wish people understood more about crypto, and the question you get the most that you wish people understood?
Yeah, I'll touch on an interesting kind of anecdote to your observation about being in the S&P 500. When you look at the big Aussie super funds, and I'm talking about the kind of 15 or so largest ones, and I'll remove them from, QIC and the Future Fund and the kind of state investment arms, who I think are actually highly sophisticated. But we continue to get a whole lot of FUD from some of these super funds, and saying that you can't be guardians of people's future wealth and their kind of sovereignty and their wellness and their financial good standing if you invest in crypto. And a lot of our pitch to those audiences, and particularly the self-managed super fund space, which we're excited to be offering a product to, is allocate 1 or 2% to this asset class. Classic portfolio diversification strategy, the same way that people thought about venture capital and private equity and fixed income and other things over time. And so to hear that response from the supposed custodians of these enormous unions and what seems to be a little bit of a broken industry here is very frustrating. We do have some outliers who are moving. The state investment funds and the Future Fund, they take a much longer term view, and they're well along the journey. And we actually have our IR team, our investment relationship team, down here for a Barrenjoey Barclays conference in December, and this will be their first visit to the market. A nice kind of train of Aussie clients coming up to see them in New York. So that's exciting. But I just think the most frustrating comment is this tie to criminality and the dark web and all of the kind of evilness of what's out there, on the online. And we spend huge amounts of time with police, with crime fighting organizations, with cybersecurity teams and all arms of government all over the world, really leaning in as a good actor and providing whatever information is required, as long as it comes with the right documentation, to ensure that consumers aren't being harmed. And so if you were to look at cash versus crypto as a funding mechanism or tool for crime, it's like a 7-to-1 multiple of cash being used over crypto. I've got endless stats that we can talk about. And then actually the paper trail on chain, if someone is using crypto, is pretty visible. And so that's why, we get quite excited and really get some joy out of solving some of these cases where people have been taken advantage of in a nefarious way by digital asset activity. So that's the thing that kind of upsets me. But we'll keep fighting that fight and remain, incredibly optimistic about the outlook.
Well, thanks for joining us today, John. I think you're in a really interesting seat. You're at a business that straddles almost the entirety of crypto, and you're in a region that gives you incredible diversity of users and a big user base, right? People that have been at the forefront of driving crypto usability over the last decade or so. So look, thanks for joining us and sharing your insights with our listeners.
Thanks for having us, Richard. DACM's been a long-term supporter, and we hope we can serve you well going forward as well.
Thanks, John. Thanks everyone for listening to DACM Insights. If you found this interesting, please sign up to receive our weekly newsletter, and there'll be more of these coming as we look to introduce more projects that we find interesting across the crypto space to all of you.